Hello, and welcome to this session about the trusted advisor's role in wealth creation and preservation, where we will cover collaboration, regulation, and the alignment with wealth owners' interests. To set the scene, let's start with a definition. Wealth creation, preservation, and its transfer fall under the concept of wealth management in a broad sense. Wealth management can be challenging, not only for wealth owners, but also for professionals. I have highlighted here six building blocks for a coherent and comprehensive wealth management framework, which are asset management, wealth planning, estate planning, ownership structuring, family governance, and asset protection. Each of these fields comes with its own challenges. So, if we look at asset management, you first have to define an investment strategy with a specific asset allocation. You have to select an asset manager, and finally, you will need a monitoring and controlling function. How have wealth owners been dealing with these challenges in the past? Well, a preferred approach was to work with a large private bank or a large wealth manager where they receive all services under one roof. While this is convenient, it also has some downsides. First of all, wealth owners need to compromise on diversification, and they create a dependency from one specific provider. And secondly, they also have to compromise on quality. I'm not saying that wealth managers and private banks don't deliver at the required quality level of services. But what I'm saying is that, in particular, in these six fields we have here, that there may be some more specialized providers. What we have experienced over the past years is a change in approach of wealth owners, in particular with the 2008 financial crisis. There was an erosion of trust in banks, and wealth owners started to collaborate with different service providers in the industry, and this has shaped the wealth management ecosystem substantially, so that today we see much more diversification. We saw the emergence of new solutions like in the fintech and in the blockchain space, and that wealth owners now assemble services for a comprehensive framework. This has also led to more collaboration in the wealth management ecosystem. If we look at the Swiss example, Switzerland is the largest global cross-border wealth manager with a total of private wealth under management of 3.7 trillion Swiss francs. And for this presentation, I want to highlight four service providers. These are external asset managers, family offices and trustees, wealth tech solutions, and blockchain solutions out of our crypto valley. Let's start with the Swiss external asset management market. What are external asset managers? Well, they are independent from banks, and usually their main service line is asset management. In Switzerland, we have more than 2,000 external asset managers. They administer more than 500 billion Swiss francs, and on average, these are 100 million Swiss francs per external asset manager. They are serious market player because they cover 17% of the Swiss wealth management AUM. The main jurisdictions are Switzerland. They are quite popular locally, but they cater also to our European neighbors and clients from Middle East and Latam. They also discovered the service, and we have seen substantial inflows here over the past few years. How does the external asset management model work? We have three contractual relationships here. So first, our client will go into an asset management agreement with the external asset manager. She will then go into a custody agreement with the custodian bank. And finally, the custodian bank and the external asset manager will go into a cooperation agreement. The benefit of this model for the client is that she will have clarity about the services, also about the pricing, and she will experience a better alignment with her interest, simply due to the fact that an external asset manager has not a high incentive for cross-selling. This already will help the client to manage conflicts of interest. Our client here will not miss out on further wealth management services because these services can be provided by the custodian bank. This could be, for instance, lending that can be granted over deposits in the bank. And finally, why are custodian banks collaborating with external asset managers? As I mentioned, they are a significant player in the market, and custodian banks want to seize this opportunity. In my view, this model has one downside, that it's lacking a control function. But also here within the industry, we find specialized players. For instance, we have dedicated boutiques that assist in the selection of external asset managers and then also perform monitoring and control. Another service provider that can cover this function could be a multi-family office. And here, with the collaboration of three service providers, what the client would achieve is a comprehensive wealth management setup where she has clarity about the services, clarity about pricing, conflicts of interest are reduced significantly, and there is also a control function for informed decision making. If we want to go one step further in individualized wealth management setups, then we get to the virtual family office. What is the virtual family office? It's a single family office that has some core capabilities and is then leveraging technology and collaboration. We have here two technology solutions. One is Altu, which is a Swiss cloud-based wealth management tool that assists in gathering data from various custody banks. They don't need to be in Switzerland, but can be around the globe. So with that, wealth owners achieve aggregation of their data. They can perform an in-depth analysis, and that again serves for informed decision making. Another tool I have picked here is called Orca. Again, it's from Switzerland and it's cloud-based. This tool helps to visualize structures such as trusts, foundations, and corporations. It's not only visualizing structures, but it's also gathering all information related to these structures. In addition, it also serves as a collaboration platform, so different service providers can plug in and then deliver their services. You can allocate tasks with such a tool, and you can even implement a compliance function. So with such a platform, then the virtual family office will leverage collaboration. This can be of an ongoing kind, but can also be ad hoc, where then service providers plug in, collaborate on the technology platform, and the virtual family office still has a central cockpit where it can oversee all activities and also control costs. So this is a solution with low entry barriers and rather lean in the setup. So usually a virtual family office will not will also not have a lot of stuff, but you can achieve similar results than with a fully fledged single family office. The last example out of the Swiss wealth management industry I want to share with you comes from the crypto valley and its tokenization of art with non-fungible tokens. What are non-fungible tokens? These are unique tokens on the blockchain that serve as a container of rights and information. Specifically for art collectors, they have to deal with a lot of information. They need authenticity reports, provenance certificates. They need to document all the transaction history. They may have to archive insurance documentation and so on and so forth. So usually this information is available in paper format, in the best case as a PDF. What we can do now with NFTs is that we transfer this information to the NFT as a container, and then it will be immutable on the blockchain. What we can do in addition is then to transfer the right of ownership into the NFT so that it will also represent ownership of the artwork. Such solutions we find around the globe, so this is not something unique that you will find in Switzerland. What, in my view, is game changing is that Swiss banks now start to take into custody NFTs. So an illiquid asset is becoming liquid. It will display in the bank statement, and banks even go one step further that they allow transfer of ownership of NFTs on their platform. So if one of their clients wants to sell a specific artwork, this can be done by selling the NFT. The buyer will onboard with the bank and the transaction happens within the safe environment of the banking platform. So this is creating added value for wealth owners and solving a specific problem related to art. In the future, we will see further services. For instance, the NFT could serve as a collateral for lending against the artwork. In light of the changes of the wealth management industry, also regulators had to react. I want to share a few examples here with you of what the Swiss regulator did to take into account new service providers and also new models of collaboration. We recently got new regulation for external asset managers and trustees. So this is the alignment to European MiFID regulation, which is driven by governance and compliance requirements. And here, wealth owners will definitely benefit because with these new requirements, we will also see an impact on the quality of delivered services. What the Swiss regulator did wisely was to exempt single family offices and private trust companies. The main reason here is that since these entities cater to only one family, there is not the need of such a high level of consumer protection, and therefore this also makes it easier for them to deal with regulation. What may still remain applicable is anti-money laundering and common reporting standard compliance, but this is rather straightforward to manage and can even be outsourced. And the final example here comes from the blockchain environment, where we got distributed ledger technologies regulation. According to international commentators, we now have one of the leading global digital assets regulatory frameworks. I would agree with that for one reason. It really provides certainty. Certainty for wealth owners when investing into digital assets, but also when using digital assets for structuring wealth. And certainty is essential in private wealth management. This brings me to the last part of my presentation, the alignment with wealth owners' interests. I would say that the wealth management industry changed substantially over the past few years, but still it remained difficult to navigate for wealth owners. So we have much more solutions now available, but still they need to make decisions. They have to perform assessments of the various service providers, and they have to make sure that the various services then work together in their framework. This is where they need trusted advisors. And trusted advisors in many areas, they can create added value for their clients. A first area I want to highlight is control. This is often overlooked by wealth owners. So, irrespective of how the individual solution then will look like, they have to be aware that they need a control function. And here, this is an important part that trusted advisors can cover by raising awareness for wealth owners, but also by assisting them in implementing control frameworks. As we have seen with the examples of collaborations, this is like building small ecosystems of various services and service providers. Again, this is challenging to navigate for wealth owners, and here they need the assistance of trusted advisors that help them to build ecosystems and to leverage capabilities. What are the benefits for clients? On one hand, it's transparency in pricing, it's clarity about services, and for me, the best achievement is that they better manage conflicts of interest. As I said, they find it challenging to do this alone, so they need trusted advisors that can assist them. To conclude, in light of what we have seen with regard to solutions in the industry, definitely trusted advisors can create opportunities for wealth owners. And this is not only true in Switzerland, but at a global level.